Okay, so here's a card. You have 5,000 to invest in any stock, so choose wisely. Wait, hold up. How am I supposed to know what to invest in? I have no idea about this. There are just so many. Where does it come? What, eh? What am I supposed to do? Well, that's exactly what we'll be covering in today's video.
I fight to live, I fight to strive. One day I'll have what I want in life.
Make sure to go over to the XO channel, hit that subscribe button, and hit that notification bell to stay up to date with all the future videos. Okay, before I continue, I must say that I'm not a financial advisor. None of this should be considered financial advice. I'm just some guy on the internet telling his opinion about certain topics. And with that out of the way, back to the video. When it comes to choosing stocks or what to invest in, it can get overwhelming. With the vast amount of options that are out there and many more being added each day, it is very easy to just go,
fuck this shit, I'm out,
and you'll end up doing nothing, which is the worst thing you can do. Okay, so what is the correct answer? Well, again, I'll go back to my favourite word, perspective. Now, if you want to get an understanding of this topic, I'd suggest you watch my video called Do Other People's Opinions Matter, where I break down what perspective kind of is and how it is really beneficial in investing. But essentially you need to find out what kind of investor you are, because that will dictate what stocks you need to pick to fit your investing style. But in essence, it will depend on the type of person you are, your circumstances, how much money you have, what type of situation you have financially, and all them kind of things. First thing you need to do, like I said, is choose what type of investor you want to be, whether that is for growth, capital gains, or whether you want to be a dividend investor and get paid the profits for holding that company. Most individuals who don't want to spend too much time analysing stocks, don't want to sort of learn the market, don't want to constantly keep looking at it, then things like ETFs are your best friend. Now, something like the S&P 500, which is a collection of 500 companies, which include the likes of Tesla, Apple, Microsoft and so on, this is referred to as market. And to be honest, people have a really hard time trying to beat this. The S&P 500 over the long run outperforms a lot of hedge funds, a lot of investors, and it's only a rare few that actually do manage to beat it. So if this sounds like you, then this ETF might be something you should consider, and I do own it myself along with individual stocks. Now, if you're wanting to gain passive income, you'll need to look for companies that pay a dividend. Now, a dividend is a reward that is given to you for holding a particular company. So companies like Apple, Microsoft, they do pay their shareholders a small dividend as a reward and a sort of a thank you for holding that company. Now, there are two types of dividend investors. One is called the dividend investor and the other is called an income investor. Both are striving for the same thing and both will receive dividends. The only difference is the income investor will focus on companies with a higher dividend yield. This high dividend yield will allow them to then have less capital to be able to live off those dividends sooner. So we'll take a look now at a calculator just so I can show you how it works. Okay, so now I'm on this dividend calculator website. I've put in some few details here. So I've just set it up how my ISA is set up basically. So drip feed on the ISA, yes. Annual contribution is 20k a year. That's the max you can put into an ISA a year in the UK. Tax rate I didn't change. Then I'll put a high dividend yield here just to show you what that's like, and then it's over 20 years. So when we scroll down here, we can see the years here, we can see the amount that will be in our account and how much dividend per year we'll be getting. So you can see with a 7% yield, you can reach retirement quite quickly. Like if you keep putting in 20k a year from like now, in 10 years you'd have 24k a year from dividend. If you go all the way up to 20 years, you'd have 131k from dividends. Now, obviously, this isn't completely accurate. You'll have tax on that dividend.
It's the worst part of the game.
Oh, it's what?
Taxes.
You'll have inflation that'll make that not as big, and you'll have a bunch of other things. But it's just showing you the idea that higher dividend will give you higher dividend, and a higher yield, sorry, will give you higher dividend amounts. So if we change this 7% to something like 3%, which a lot of people's portfolio is around 3%, 3 to 4%, when you're going for like companies like J&J or 3M, other things like that, you can see that it'll take you a lot longer to get to that same amount per year, and as 20 years you're at 37k with that same million. So it's basically, with the dividend yield, a lot of times with the lower dividend yields it's so-called safer, and you might get the more capital appreciation still, whereas companies with higher dividend yields are generally riskier, and then obviously they don't have as much capital appreciation. It's not always true, there is like a weird line between it. If you want income strategy, then Dividend Pool is one of the best YouTubers for that. He focuses on things with high dividend yields and has found some great success in companies with that. Personally, for myself at the minute, I kind of mix between it a bit. I'm trying to up this amount, but I'm still young, so I still have time to allow for this to sort of compound on its own, like expected annual dividend increase per year, thing like that. That's basically what I was trying to show you there. Okay, and the final type of investors is growth investors. Now these people will focus on capital appreciation, and they'll go over companies like Tesla, Microsoft, any of these startups, sort of IPOs, that kind of thing. They will go for anything that will have high growth and that they think they can get their money up as quick as possible, basically. Okay, so once you know what type of companies you want to target, the best thing you can do for actually nailing down on stocks is to use something like a stock screener. So I'm going to show you the one I've been using and that I'd recommend, and then this will be basically, the idea of it is to set parameters of certain things. Like if you have a certain dividend yield you want, say you're an income investor, you want 5% or higher, then you can set that, and then this stock screener will go and find the companies that are like that. If you want companies with really good balance sheets, you can then set financial health and stuff like that. Okay, so now on Simply Wall Street, which I've talked about many times in my stock analysis videos, but they also do have a screener. Now, like I said here, you can filter by certain things. So we've got filter by market, filter by industry, advanced filters, and then we've got the snowflake over here. And you can just drag these to fit. So if you want high dividend, drag it up. And then as it did there you go, 180 companies found with that. So I'll come up with some of the highest dividend yielders in the market. So changing the market depends on your location and what sort of platform you use, so you can get it down to your country if you want or whatnot, so that's useful for that. And then industry, obviously if you want a certain industry you're targeting, you can do it there. And then advanced filters is where you can get market cap, share price, value, peg ratios, earnings, past performance, financial health, dividends, dividend yield, turn that on. And then you could say the minimum amount is you want 7% up to 10%, well up to infinity basically, and then that would then find you, there you go. So we've got these, so you'll have to find out what trading platform your broker uses, and then you can then use that along with the combinations to filter the companies that you can invest in. So I've used this for many companies. That's how I found Polymetal International, Centamin, Evras, and Ferrexpo, I think the other one, which all had high dividend yields. So that's how I found them companies. Now, well, I say unfortunately, but this is a paid tool, so I am on the free plan in a minute, so I can't, as you can go down here, it's £8 a month if you want the stock screener, so it is cheap enough to do. I'm just not doing it in the minute because I'm not actually adding to my portfolio at the minute, just due to financial reasons. So obviously I can't, there's no point me doing this for now. But I did have this before, and it was such a great tool to be able to add some things to my portfolio. So this is the best way I found personally to find new stocks, because there are so many on the market. There's a ridiculous amount. So if you wanted growth, you could go here, something that I'd want to do. There you go, Tesla. So it's got Tesla as like past, future, health, and then it's definitely, well, depends on how bullish you are on it, but it has it there as overvalued and whatnot. And then on the free plan you could find a few of these right off the bat up here and then go from there. But basically that's what I wanted to show you with the stock screener, and then you can go on this, play around with any other stock screeners and see what suits you. Okay, to sum up this video, basically you are trying to find what type of investor you are first. Once you know this, then you can use things like stock screeners to find the individual picks that you want. You can search all over YouTube for people's opinions about different stocks as well, stock analysis videos. I have a few myself, so if you're not sure whether that company is good or not but has some of the parameters you want, then you can then go and find other videos like mine, or go on Monthly Fool, see what they have to say, any of these. There's so many resources out there now for finding whether a stock is good or bad. Look at the financials. The Trading 212 platform that I use do break down the companies on there. They'll have their financial statements, balance sheets, cash flows, and then you can cross-reference them with other things. So it's all about that. But for finding or cutting down a bulk of the companies to a specific range you want, then a stock screener is going to be very beneficial. Now, I hope you enjoyed the video, got some value out on the video. If you did, consider leaving a like, comment, subscribe, all that good stuff. Check out all the links in the description. Like I said, Trading 212 is a platform I use. There's a link down there to get a free share. If you're into crypto, I have 2 links down there, Blockfi and Gemini. Gemini is where I buy my crypto. Blockfi is where I store it to earn additional interest. I believe it's 4 and 5%. 5% for Ethereum and 4% on Bitcoin. So added gains, can't complain, make your money work for you. And I'll catch you in a bit. Peace out.
Tell me pretty lies, look me in the face. Tell me that you love me.